Now on BBC World News, the latest business news from across the globe. World Business Report.
Inflation slows in the United States. Prices are still going up, but not as much as feared. Is it a sign the cost of living crisis is easing? And crypto chaos. Bitcoin and its rivals slump as leading exchange FTX faces bankruptcy. We'll assess just how much trouble the crypto world is in. Hello and welcome to World Business Report. I'm Jonathan Josephs. Welcome to you wherever in the world you're watching from. Now, in pretty much every country around the world, millions of us are feeling the impact of the rising cost of living. But in the United States, the world's biggest economy, there are welcome signs those pressures are easing. In the last hour, we've had the latest inflation data, which shows prices rose at an annualized rate of 7.7% in the year to October. That's down from last month's 8.2% and raises hopes that the US Central Bank, the Federal Reserve, will be able to slow down when it comes to increasing its main interest rates. The widespread influence of the US dollar means that will be welcome news around the world. Well, let's go to Washington and speak to Roberto Perli, who is a former US Federal Reserve official and is now global head of research at the investment firm Piper Sandler. Roberto, welcome to the programme. Thanks for joining us.
Thank you.
What do you think this number means about the state of health of the world's biggest economy?
Well, I think the CPI report today was certainly encouraging. Right? So we saw significant declines in used cars, which had been a problem for a long time. We saw a decline in core goods, which is good. We saw declines in even healthcare, which is good. So it's encouraging. The problem is that, will it continue? It's not the first time, right, that we saw an encouraging report only to be disappointed by the following one. So I think we should take it with a grain of salt, and certainly the Fed will take it with a grain of salt. So encouraging, but certainly not a game changer, at least yet.
No, not a game changer for the Fed, which is focused on making sure inflation is at 2%. That's its target. So we're still well above that. It's also got a remit to make sure there's maximum employment in the US. But with the upcoming holiday season, which is normally a time of high consumer spending, does that mean that the pressures on inflation will not ease anytime soon as people still spend money?
Well, certainly this is one of the reasons, I think, to be careful in how we interpret this particular data point today. Consumers have still close to $1 trillion in excess savings that are available for spending. And I think, yes, the holiday period is a prime candidate for when this excess savings could be spent. So that's certainly not something that could point to a rapidly diminishing inflation. There are also other reasons, right? So, for example, wage growth is a lot higher than it was at the peak of previous cycles. So 6.25% roughly, according to the Atlanta Fed. So again, we need to be very careful. I think the Fed, from a Fed perspective, Fed will slow down its pace of hikes at the next meeting. Instead of 75 basis points, do 50 basis points. But at the end of the day, what really matters is the peak rate. And I don't think today's report changes the peak rate in the Fed's mind. 5% roughly was, and 5% probably still is.
Roberto Perli, former Federal Reserve official in Washington for us there. Thank you very much for your thoughts on that US inflation number.
Thank you.
Now, let's move to the world of cryptocurrencies, because one of the world's biggest exchanges, those are the places where people can buy and sell the digital currencies, is facing bankruptcy. FTX was hoping to be rescued by its bigger rival, Binance, but they've walked away from the deal, saying that they were unable to help, and the problems could lead to billions of dollars of losses because FTX has stopped customers withdrawing their money. And those problems are rocking the wider crypto world, with many of the most popular currencies seeing values fall by big margins. Bitcoin is now at a 2-year low. Let's turn to the crypto expert Glenn Goodman, who is now a consultant with eToro.com. Glenn, When we see these problems and potentially billions of dollars of losses, just explain, what is it that's actually caused this sudden reversal in fortunes for FTX?
Well, this was actually addressed rather nicely in a short tweet by the CEO of Binance, the world's biggest crypto trading exchange, the one that has been embroiled and almost bought FTX and then pulled out and said, actually, we don't want to touch this. So that's why FTX is in the trouble that it's in now, is because Binance was supposed to rescue it. But anyway, he says, Changpeng Zhao, he says, never use a token you created as collateral. And number two, don't borrow if you run a crypto business. Don't use capital efficiently, have a large reserve. So what he's basically saying there is the equivalent of, imagine you, Jonathan Joseph, issued a load of tokens, basically printed a bunch of tokens, called them Jonathan Joseph tokens, and then spread them far and wide and expected your net worth to be based on these tokens. And then one day, people lost faith in Jonathan Joseph for whatever reasons. The value of your tokens goes to zero and suddenly you've got nothing left. The point is, this crypto exchange, FTX, invented its own money, FTT tokens, and then used them as collateral, allegedly, and used them to prop up its own hedge fund sister business, allegedly. You know, all of this stuff is still yet to come out in the wash, but it does seem like the principles that were outlined there of having a large reserve, not using banking style fractional reserve banking as your model, all of that kind of thing, it seems like some of that was ignored.
And Glenn, there are also these suggestions that FTX is in recent months has rescued some other platforms, and that has been part of the problem. I mean, does this all speak to a situation where cryptocurrencies really are having a moment of inflection? Some are suggesting that it's something of a Lehman Brothers moment, which was when the US investment bank collapsed and triggered the global financial crisis of 2008. Are we looking at something as seismic as that here?
It's not as seismic because the crypto industry is still not quite that big to shake the whole financial world to its foundations like Lehman did. But this is very significant for the crypto industry. There is contagion. Nobody knows exactly where the counterparties are, how much different people are owed by FTX, or what sort of knock-ons there will be. But what really winds me up about all of this isn't what crypto is supposed to be about. Bitcoin was invented as a decentralized, trustless way of spreading money from one place to another. The idea being that nobody would be in charge. There wouldn't be any big billionaire who we had to trust. And yet all these years later, here we are with hundreds of thousands of people trusting in this billionaire and effectively putting their money on his platform. And now look what happens.
So a lot more to unpick, it seems there, Glenn. Thank you for your thoughts on FTX.com's troubles. And thank you, Glenn, who is a crypto consultant at eToro.com. Now, I don't know about you, but I've been doing a lot more working from home because of the pandemic, even though the restrictions have eased. Well, it's a good job I don't work for Twitter, because its new owner, Elon Musk, has said that won't be an option for its staff anymore, those that have survived the cuts. It's just one of many changes that he is bringing in. Let's get more from our correspondent, Michelle Fleury, who joins us from New York. Lovely to see you, Michelle. Just run us through this. Why is Elon Musk so against working from home?
Look, I think he believes that it doesn't do much for productivity. He doesn't trust people to deliver the kind of work that is required. We've seen this in the past and reported on it during the pandemic, how he basically issued some pretty tough messages to his staff at Tesla, the electric car maker he owns. And now, unsurprisingly, he's delivering that same message to his new company, to staff at Twitter. Broadly speaking in America, I think anecdotally, what we have seen is this kind of growing schism, if you like, between what employees like and what employers want. There has been this push, certainly this autumn, to try and encourage staff to return to the office. And so increasingly, you're hearing employers demand that maybe they're back in from Tuesday to Thursday, or demanding sort of certain days. From the employee perspective, the trend you're starting to see is this desire for more of a flexible approach, a hybrid approach. They don't necessarily want to work from home all the time, but they maybe want more control over when they do have to go into the office. Separately, though, it's worth pointing out there was a study on LinkedIn where they noticed that more of the job postings online, there is less and less offering hybrid. So I think it sort of goes to this idea that, you know, you have this split between what workers want and what bosses want.
Michelle, so it seems that Elon Musk here is a bit more of a trend taker than a trendsetter for once. Thank you very much for that. Now, let's have a quick look at markets here in Europe. As we can see, if the boards come up, share prices are up here. That's good news in terms of the US inflation figure. Many are welcoming news then because they think that the Fed Reserve won't increase interest rates quite as quickly now, makes European assets more attractive. That's all on World Business Report. Thanks very much for watching.